We have also started the earnings season. In fact, companies have started reporting their first quarter earnings. We'll start with 8K Mile Softwares today, which reported consolidated net profit of 19.3 crore rupees versus 12.3 crores in the last quarter of the last financial year. And the stock is up in double digits. It's up 12%, a gain of about 213 rupees per share. Total income came in at 104 crores versus 86.3 crores in the fourth quarter of FY16. EBITDA margin also expanded sharply to 35.4% for the company in this quarter. To discuss the earnings and how the quarter was, we are now joined by Mr. Suresh Venkatachari, Chairman and Managing Director at 8K Miles. Sir, thank you very much for joining us today. Good to have you on the show. Great set of numbers in the first quarter. What aided this growth for the company?
We need to expand our revenues in the cloud easy for the pharma industry. And also we have added healthcare customers in this quarter. So these are the revenues are added.
So I think there is some issue with the Skype link. We will just reconnect that and get back to you with the discussion as far as 8K Mile Software's earnings review is concerned. But they have reported great set of numbers in this quarter. Just to revisit the numbers that they have reported in Q1. So the consolidated net profit came in at 19.3 crore rupees for the company, which is a jump of about 57% on a sequential basis. Total income, meanwhile, was higher by 20% at 104 crore rupees as compared to the fourth quarter of FY16. The EBITDA margin has expanded sharply as well for 8K Miles in the first quarter at 35.4% as compared to 30.5%. And the stock is looking very strong post the earnings, 1994 rupees per share. That's where it is trading right now, a gain of about 216 rupees per share. If Mr. Venkatachari is back with us. Okay, we have Mr. Venkatachari back with us. Sir, you were telling us about the performance in the quarter and what aided this growth.
So basically we enhanced our existing customers in the pharma industry on our Cloud Easy. And also we have added a couple of new customers in the pharma industry and 4 new customers in the healthcare. In addition to that, we have brought a lot of engineers in the last quarter which we able to place in the project. So these are the main reasons the revenue has been increased on the bottom line too.
In terms of new clients, how many have you added in this quarter itself, and largely have they been in the pharma space only?
No, it's customers in the pharma space and 4 customers in the healthcare space. So these are actually very large customers, but the revenue in terms of recognized in this quarter is maybe minimal. But this can able to provide a continuous growth in the next 12 to 18 months period.
Margins have expanded sharply in this quarter, Mr. Venkatachari. What's the outlook now ahead, and what led to this expansion in this quarter?
So basically, if you see in the previous quarters, except the last quarter, we normally maintain between 33 to 34% EBITDA margins. Only in the last quarter, we have a dip to 30% because we have added a lot of new employees in the US. However, going forward, we would like to maintain this kind of growth in terms of EBITDA as well. And this is aided with our more of a cloud easy solutions where we can able to really automate and do a complete cloud transformation for our both pharma and also BFSI customers.
Going forward, what will be the key focus of the company, and any targets that you can give us for FY17, looking at the kind of growth that you've delivered in Q1?
We do not give any forecast. However, what we see as an industry, there's a lot of opportunities. And we see a good traction with a large healthcare company right now. We are in the proof of concept stage. That could lead a big opportunity growth inside. Same thing is going with the pharma. So we also started focusing more on a banking and financial industry. And even last week, we have exhibited in the AWS Summit in Mumbai, and we got a good traction from a lot of banks are interested to move into cloud transformation. So these are as more companies are adapted into more cloud transformation and cloud implementation, where we see a great growth. So our focus is to increase our bandwidth in both in Amazon and Microsoft Azure capabilities, so where we can able to enhance a lot of predominantly old data center business into more of a cloud transformation. And also we own actually a big data project now, so that is also really aiding us to more growth in the big data side.
In terms of new geographies, where all are you looking to expand ahead in FY17, and how was the performance in Q1 as far as different geographies are concerned that you operate in?
We currently actually focus on a few geographies actually, which is predominantly North America and also Middle East and Asia Pac. We wanted to expand into European market. We have few European customer right now, but it is serviced in the US. So we want to expand in the Europe. Actually, we are considering of setting up operation in Britain, but that has actually a little bit of pullback because of the Brexit. So we are waiting to see what is going to happen and what are the impacts in the next few months. Then we will make a decision, because we see there are a lot of opportunities in Europe also on the cloud transformation, and we are getting a lot of inquiries and opportunities through our partners. So we are measuring the impact right now on the Britain, and then we will take it forward. But currently we do not have any exposure or impact.
All right, and we will look forward to the announcement coming soon, of course, as soon as some clarity emerges as far as Brexit is concerned. Thank you very much, Mr. Venkatachari, for joining us here on NDTV Profit and sharing with us the details about the quarter gone by and the outlook ahead. We had Z-Learn.